What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Marco. Is it Pfeiffer? Is that how you pronounce your last name?
Yeah. Just like the actress, Michelle Pfeiffer.
Oh, okay. Far out. Awesome. And I got great news for you today, Marco. Today, we are joined by my very favorite audience member. And why is my favorite audience member here today? Well, it's because this is a chance encounter where I interview commercial real estate syndicators, that's buyers, sellers, people like that. And why would I do such a thing? Well, apparently I have to document my investor and syndicator relationships to show that I have a prior substantive relationship. So it's kind of the law, but the bigger thing is I want to make sure that you learn how to effectively communicate on how a commercial real estate deal works, and more importantly, understand how my guest fits into those deals. But before we get too excited about that, Marco, do you want to say a thing or two about yourself before we get into the details?
Yeah, my name is Marco Pfeiffer. I'm a professional real estate investor. I'm on the road right now. I'm like on a 3 months road trip, so I'm dialing in from an Airbnb and a Mississippi Gulf Coast. So my background is not as polished as Dan's, but so yeah, dialing in from the road.
Oh, well, I assure you, there's nothing glamorous about the snow drifts outside of my house. So, like, don't worry, we're good. But the first thing that we start to talk about, the first segment here is the 5 distinct motivations. But before that, I always say, but wait, check your 8. If you can look at the camera and like around where our 8 o'clock is, it's the audience is 5. Under there, there might be a big ugly red subscribe button that the gray one's better, and if you can hit it. No, it's just a stupid joke I always do on every episode here. But the 5 distinct motivations for why people get involved in these deals. The first one is preservation of purchasing power. Okay, and what that's all about is if somebody already has a portfolio of assets and they rely on the purchasing power that comes from ownership, then this is what they're up to. The only time they're going to be making a new acquisition is when inflation is rearing its ugly head and they need to increase that cash flow. Or the second one will be is if there is an asset crash, and that way you can buy at a bigger discount. But yeah, we got Marco. Yeah, cool. Marco's coming back in. I'm still explaining the first reason here, which is preservation of purchasing power is one motivation that people have for making their next acquisition. So after all, it will take months to get it under contract and do due diligence and all that kind of stuff. So some people, the reason why they're doing it is because they've already got a portfolio, but either inflation is eating away at it or they're buying at discounts. But this is not why I do this. Why I do it is because I'm trading time directly for wealth. I got a background in technology, specifically CRM agencies, especially the ones about accepting credit cards online. And so my issue is I found out that I am paying more in tax than anybody as a high wage, high salary earner. So how could I pivot to where I'm getting rewarded in the form of deployed capital, aka equity? So that's what I'm up to. But some people are just trying to fast track to retirement, but really that could mean just taking control of your schedule, like working fewer months per year, fewer weeks per month, something like that. That's also not me in particular, but some people are super duper ambitious. They want to buy their entire hometown. They're after that generational wealth. They're going to be hustling into their 90s because they want to make sure that their great grandchildren never have to hold a day job. And the last category as far as motivations go, though, is some people pick a sector of society, or maybe it's animals or the environment. But regardless, they realize that they want to make a difference, but there's a large financial component to it. And that's why they make these commercial acquisitions. So, Marco, I know that was pretty fast, but of those five motivations, were there any of them that you felt describe you best, or a combination of them?
For me personally, it's probably a combination. I'm not chasing the big numbers. I mean, for me, it's all about freedom, time freedom, and personal freedom. So I'm falling in the category. I probably will never stop investing in real estate. It's just something I enjoy. It's something yeah, it's just I enjoy them more than most other things I ever done. But also at the same time, it gives me the time and the freedom to do what I do whenever I want to do. So for me, it's all about chasing cash flow and building up more cash flow and becoming more, more free, more uncontrollable, ungovernable, ultimately.
I love it. I love it. And that brings me to the next question here, which is the tolerance for risk assessment. Now, sometimes we get some newbies on the show, and sure, they've heard that, hey, there are big numbers floating around in commercial real estate, so there's plenty to go around for everybody in theory. But the fact is, there are risks involved. This is complex stuff. It's highly competitive. I like to say that real estate is the world's second oldest profession. But the tolerance for risk assessment question is a fill in the blank question. So, Marco, can you fill this in, please? There are many popular investment asset classes, but I think blank is too risky. What's too risky for you? It can be real estate or non-real estate. It's all up to you.
Probably too risky for me is stocks in general, Wall Street, or you're putting your retirement into stocks. I think that's one of the riskier bets you can take. There's a lot of people in 2008 who were planning to retire that year, and then next thing you know, they had to work another 3 or 4 years. Same here recently. So I personally believe that stocks is one of the riskiest bets you can. In the long run, there's no doubt it will go up, but your timing wise, you can be at the right place at the wrong time. So I believe stocks is one of the riskiest bets that are out there.
I love it. I love it. So the next part then is specifically about the commercial real estate deals. And one thing I do in every episode of Chance Encounters is I go through the dandoesdeals.com commercial competency cube. You can try saying that a few times. But anyway, it's got the 6 different core roles in a commercial real estate deal. And if you go to dandoesdeals.com, you can download and print out your own copy. It's absolutely free. I don't even ask for your email address, which from a marketing perspective, that is the dumbest thing you can possibly do. You should always ask for contact information. But I don't do that because I want no barriers to you getting your own copy, printing it out, practicing so that you can learn how to effectively communicate on the roles in a commercial real estate deal. And in every episode, I go through all 6 sides just to make sure that you know all of these pieces enough to understand how my guest fits in these deals. It just takes a couple of minutes. Let's do this. A repositioner is a person who looks at a bunch of different properties, does a bunch of paperwork. What are they doing with this paperwork? Well, there's a fancy word for it. They underwrite the deal. That means they do the arithmetic. They figure out, is this building actually even making the amount of money that the seller is claiming it is? And the reason why I call them repositioners, some people call 3 different roles on here investors. I call them repositioners because they also have to figure out how are they going to change how this business works to find more upside. The easiest one, every repositioner has some investor relations talking to financiers. Those are people who only deal with paper and money, and that's it. And if you can get more advantageous lending as a repositioner, you've automatically found upside. So that's one play that they're up to. But as far as how the actual business works, the first place the repositioner is going to look is the operations. How can they stop those Benjamins from going down the toilet? But of course, there's more to operations or asset management or property management than just picking up rents and mowing lawns and all that kind of fun stuff. One of my fortes is marketing, so that helps to make sure that the vacancy rate stays low. But at the end of the day, operations is a very difficult thing to run more efficiently very often. So the repositioner will frequently need a contractor team to do a value add or renovations on the property. And one of the problems with investing more money into these units, of course, you're doing it because you want the next tenant to be happy to pay more than the previous one, but there is a hard limit to how much you can do it. And then there's also the time cost. So one problem that the repositioner might have about having this contractor team on is they might be like me. I'm from the internet, so that means I need a local. I need somebody who can be there in an hour or two, because that's not going to be me. I'd be still stuck at this airport. So when the repositioner has assembled this team and has a deal in mind, they turn around to the financiers and they say, "Hey, I got this deal. It's got like 350 units in it. It's tens of millions of dollars. Want to lend me, say, tens of millions of dollars?" Well, the financier is going to need to know one other thing, which is who is the KP or the sponsor. So if you have a team of physicians or something like that, you want to join together to take over a commercial property, one issue you might run into is if you want to get a loan and leverage, you need somebody in the fold who already owns a similar asset. So you need somebody who already owns 350 units. But on top of that, you'll need a certain amount of liquidity. And among the team, you're going to need a balance sheet of at least the amount of the loan. But if you've got all those pieces, you've got yourself a commercial real estate deal. So Marco, you and your organization, what sides of the cube do you guys mainly focus on?
I mean, I'm mostly a one-man joint venture kind of show, but I have a background in finance. I used to be a CFO, so I'm on the what you call the reposition, assessing, deal underwriting, but also have a good background in not necessarily operations, but kind of overlooking the operations, kind of based on the underwriting, kind of targeting, coming up with a strategy and how to reposition the property and come up with a solid strategy to get it there.
Excellent, excellent. The asset management, right? So the next question then has to do with buy box. And when syndicators, buyers, sellers are talking about ideal properties, we're really asking for three things. First one's geography. Which states, which counties, it might even be which neighborhood. Okay, it's all going to matter. Second one's going to be size. We're talking about multifamily here, so that is in unit count because you're going to have a different kind of group with a 15 unit count versus a 350 unit count. So the size definitely is important. And then the third thing, you could call it class. I split it into condition. So condition would be, is it an old build or a recent build? Is it beat up or is it in reasonably good shape? Is it no frills or is it full of amenities and luxuries? Okay, that's condition. And then the second one for class, I call it area, and that has to do with like what are the school districts like where the property is located, what's the crime rate, what's the amount of traffic nearby. Okay, and both of those two meanings are rated off at the same system as in grade school, where you've got A plus at the top and then A and then A minus and B plus and so on. So Marco, you mentioned that you focus on JVing in general, but what's easier to say yes to, more difficult to say no to?
Geographically, I like the southeast of the United States, in particular Alabama, Georgia, and Florida. So those three states I mainly invest in. On the unit size, I like assets below 100 units. It's just a less crowded space. Obviously, it's low, not as the returns can be lower, or it depends, but it's a lower volumes whatsoever. But it's just I personally like to operate in less crowded spaces.
Mm-hmm. Mm-hmm.
And as from a class, I like B, maybe C plus. Those are my preferred categories.
Excellent, excellent. And so then the next question has to do with who you are disproportionately well suited to help. And, I mentioned these different sides of the die, and it's great how multifaceted the business is. It actually results in people being really, really friendly and eager to give referrals. But at the same time, everybody has their own unique skill set. So, like me personally, with my CRM background, marketing, and all that kind of fun stuff, I'm usually looking for the sponsor KPs, and often also the locals are who I'm trying to find. But Marco, how about you? Oh, if you have any 506B deals going on, don't entice any investors. So if you have any cake or something like that, don't put
I
it in front of
don't.
the camera.
I
They might
don't.
get enticed.
I don't.
All right,
So,
cool. So who
yeah.
can you help? Who are you looking for?
Who am I looking for? I mean, at this stage, I mean, I exited a lot of my multifamily, so I'm looking for opportunities for new investments. I mean, I guess JPs and potential opportunities that are out there. That's what I'm looking for right now.
All right, cool, cool, cool. And as far as how to reach out, me, I've got a really distinct last name, so I'm really easy to find, and LinkedIn is the spot to find me. Marco has an absolutely enormous following on LinkedIn. I imagine that's the best way to get a hold of you. Oh, I forgot to
Yeah,
talk about my QR code though. Sorry. Yeah, if you scan that with your phone, that's the FAQ page for 506 Me, which is the platform that I help investors document their substantive relationships for 506B compliance. So if that's your thing, then go ahead and scan that. But Marco, just to make sure, is your LinkedIn the best way to reach you, or is there a
yeah,
website or something that's better?
yeah. No, I'm a LinkedIn. I'm very active there, posting every day. And yeah, Marco Pfeiffer, like the actress Pfeiffer. So yeah, that's the best way. Feel free to reach out anytime. More than happy to connect and to network with other investors out there.
All right, excellent. And then the last thing is not for you, it's actually for you in the audience. It's like a public service announcement sort of thing, which is if you've been watching this episode and you've been experiencing like searing pains in your eyeballs and like migraine like symptoms, my bet is it's the hideous red subscribe button that's down there. And the easiest way to get rid of it, you just click the thing and it turns gray. It's you can try, it's free. And okay, the reason I want you to do it is because then YouTube might actually start paying for these videos instead of me. So that's what I'm up to. What it really means is that my videos might show up on your list of suggestions, but you can feel free to ignore those suggestions. I just appreciate the fact you spent this time with me. Just like Marco, I appreciate you joining me today. It's been great getting to know you a little bit better.
Absolutely, same here. Great talking to you.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.